Good evening, ladies and gentlemen, and welcome to tonight's news broadcast. I'm here to bring you the latest developments in the world of cryptocurrency and blockchain technology over the past 24 hours. From groundbreaking press releases by fintech firms to significant political and economic updates, we've got a lot to cover. So let's dive right in. We begin with market updates that are shaping the crypto landscape today. According to recent reports circulating on platforms like Cointelegraph and other crypto news outlets, the overall cryptocurrency market is experiencing notable volatility. Bitcoin, the flagship digital currency, has seen fluctuations as investors await critical economic data from the United States, including updates on Federal Reserve policy and GDP figures. Sources indicate that the market is on edge, with many speculating that a dovish stance from the Fed could provide a boost to risk assets like cryptocurrencies. Meanwhile, Ethereum is also in the spotlight, with significant activity among institutional investors contributing to heightened market dynamics. This comes as reports highlight a substantial amount of Ethereum being moved or staked, reflecting both optimism and caution among large holders. Turning to specific corporate developments, several blockchain and fintech firms have made headlines with their latest announcements. One notable press release, as reported on platforms like cryptonews.com, comes from a project called Subu DAO. This initiative is positioning itself as an alternative to high-fee content platforms, aiming to empower creators through blockchain tools and staking incentives. Industry observers suggest this could disrupt traditional revenue models for digital content, potentially saving creators billions over the next decade. This move underscores a broader trend in the blockchain space, leveraging decentralized technology to challenge established financial and content systems. The market response to such innovations has been mixed, with some altcoins tied to similar projects seeing modest gains, while others remain flat due to broader market uncertainty. On the political front, cryptocurrency continues to be a hot topic. In the United States, political rhetoric around digital assets is heating up. Recent statements from prominent figures, including former President Donald Trump, advocate for positioning the U.S. as a global leader in cryptocurrency innovation, as noted in reports from the South China Morning Post. Trump's comments about making America the crypto capital of the planet have sparked debate among policymakers and investors alike. This rhetoric appears to be influencing market sentiment, with some analysts suggesting that pro-crypto political narratives could encourage institutional adoption in the near future. However, skepticism remains, as regulatory clarity is still lacking, and upcoming decisions from bodies like the Securities and Exchange Commission on various crypto-related financial products are being closely watched. For instance, delays in approvals for certain exchange-traded funds tied to cryptocurrencies like Solana have left investors cautious, as shared in posts found on social media platforms like X. Shifting to international developments, Hong Kong is making strides to establish itself as a hub for stablecoins and tokenization technologies. Reports indicate that the region is actively seeking to gain a competitive edge in these areas, even as mainland China's digital currency ambitions face hurdles. Analysts argue that while Beijing's push for a digital yuan is significant, it may not fully achieve the desired level of internationalization due to geopolitical and structural challenges. These contrasting approaches in the region highlight the complex interplay between politics, technology, and economics in the blockchain space. Market watchers note that such developments could drive interest in stablecoins and tokenized assets, potentially stabilizing certain segments of the crypto market amid broader volatility. Let's also touch on economic integrations that are gaining traction. Posts on X and articles from sources like Coinpedia have highlighted partnerships that could reshape how cryptocurrencies are used in everyday transactions. For instance, a collaboration between Circle, the issuer of a major stablecoin, and FIS, a global financial services provider, aims to enable U.S. banks to use stablecoins for instant payments. This development is seen as a significant step toward mainstream adoption of digital currencies in traditional banking. Market analysts believe this could lead to increased liquidity and stability for stablecoins, which in turn might have a positive ripple effect on the broader crypto market by reducing volatility in certain assets. Now, let's analyze how these news events are interconnected with market movements. The anticipation of U.S. economic data and Federal Reserve policy decisions is creating a wait-and-see attitude among crypto investors, contributing to short-term price swings in major cryptocurrencies like Bitcoin and Ethereum. At the same time, political endorsements and international policy moves, such as those in Hong Kong, are fueling longer-term optimism about the role of blockchain in global finance. Corporate innovations and partnerships, particularly those involving stablecoins, are providing a balance back to market uncertainty by demonstrating real-world utility for digital assets. However, regulatory delays and geopolitical tensions remind us that the path forward for crypto remains fraught with challenges. As we wrap up this segment, it's clear that the cryptocurrency and blockchain sectors are at a pivotal moment. The interplay between market dynamics, political decisions, and technological advancements will continue to shape this rapidly evolving industry. We'll be keeping a close eye on how these stories develop in the coming days, especially with critical economic data and regulatory decisions on the horizon. That's all for tonight's crypto and blockchain update. Thank you for tuning in, and I'm signing off with a reminder to stay informed and engaged with the ever-changing world of digital finance. Good night. Good evening, ladies and gentlemen, and welcome to tonight's broadcast. I'm here to bring you the latest developments in the world of cryptocurrency and blockchain technology from the past 24 hours. We've got a packed report covering press releases from blockchain and fintech firms, political movements, economic implications, and how these events are influencing market trends. Let's dive right in. First up, let's talk about some significant updates from the fintech and blockchain sector. Reports circulating online indicate that major players are making bold moves to integrate cryptocurrency solutions into traditional finance. For instance, there's buzz about a prominent fintech firm partnering with banks to facilitate instant payments using a leading stablecoin. This kind of collaboration signals a growing acceptance of digital currencies in mainstream financial systems, potentially paving the way for faster, more efficient transactions globally. Additionally, there are whispers of another firm exploring the launch of its own stablecoin to enable round-the-clock trading. These developments, if confirmed, could further blur the lines between traditional finance and the crypto space, driving adoption at an institutional level. Shifting to the blockchain side, a recent press release highlighted on various crypto news platforms discusses an innovative project aimed at helping content creators reclaim income through blockchain tools and staking incentives. The initiative claims to offer an alternative to high-fee platforms, potentially saving billions for creators over the next decade. This is a fascinating step toward empowering individuals in the digital economy, showcasing how blockchain technology can address real-world pain points like exorbitant fees and centralized control. Now, let's turn to the political arena, where cryptocurrency continues to be a hot topic. In the United States, there's growing anticipation around upcoming Federal Reserve policy announcements and economic data releases, as reported by several online sources like Cointelegraph and Avest. The crypto market often reacts to signals from the Fed, particularly regarding interest rates and monetary policy, as these can influence investor risk appetite. Moreover, there's talk of a forthcoming White House report on digital currencies, which could shape future regulatory frameworks. Meanwhile, across the globe, Hong Kong is reportedly positioning itself as a leader in stablecoins and tokenization, according to the South China Morning Post. This comes at a time when political figures in the U.S. are advocating for the country to become a global crypto hub, highlighting a geopolitical race to dominate this emerging sector. On the economic front, the sentiment in the crypto market remains mixed but cautiously optimistic, as reflected in posts on social media platforms like X and updates from outlets such as CNBC Crypto World. Corporate treasuries are reportedly increasing their holdings of major cryptocurrencies like Bitcoin and Ethereum, signaling confidence from institutional investors despite market volatility. This trend of corporate adoption often acts as a stabilizing force, potentially encouraging retail investors to follow suit. However, there are also reports of significant short positions by some investment firms leading to heavy losses, underscoring the high-risk nature of crypto investments. Let's analyze how these events are correlating with recent market movements. Over the past 24 hours, the crypto market has shown fluctuations that appear tied to both macroeconomic uncertainty and specific news triggers. For instance, the anticipation of Fed decisions and GDP data seems to be creating a wait-and-see attitude among traders, contributing to sideways price action for major cryptocurrencies like Bitcoin. At the same time, positive news around corporate adoption and fintech integrations may be buoying certain altcoins and stablecoin-related projects, as investors seek out assets tied to real-world utility. On the flip side, regulatory delays, such as the U.S. Securities and Exchange Commission postponing decisions on several crypto-related exchange-traded funds, as noted in online updates, could be dampening enthusiasm in some corners of the market, keeping prices in check. What's clear from all this is that the crypto and blockchain space remains a complex interplay of innovation, policy, and economics. The push for integration by fintech firms and the increasing involvement of corporate entities suggest a maturing market, yet political and regulatory uncertainties remind us that this is still an evolving landscape. For investors, these dynamics mean opportunity but also caution, as market moves can hinge on a single headline or policy shift. As we wrap up tonight's report, it's worth noting that the next 24 hours could bring further clarity, with potential updates from the Fed and additional announcements from blockchain innovators. We'll be keeping a close eye on how these developments unfold and what they mean for the future of digital finance. That's all for now. Thank you for joining me this evening. I'm signing off, and I'll see you tomorrow with the latest updates. Good night. Good evening, ladies and gentlemen, and welcome to tonight's broadcast. I'm bringing you the latest developments in the world of cryptocurrency and blockchain technology from the past 24 hours. We've got a packed report covering press releases from blockchain and fintech firms, political movements, economic implications, and how these events are influencing market trends. Let's dive right in. First up, there's significant buzz around fintech partnerships that could reshape how cryptocurrencies are integrated into traditional banking. Reports circulating online and highlighted by sources like Cointelegraph indicate that Circle, the company behind the popular stablecoin USDC, has partnered with financial technology giant FICE to enable U.S. banks to use USDC for instant payments. This move is seen as a major step toward mainstream adoption of stablecoins, bridging the gap between digital currencies and conventional financial systems. Market sentiment, as reflected in posts on social platforms like X, appears positive, with many speculating that this could drive increased demand for USDC and potentially stabilize its value further against market volatility. Shifting to corporate moves, there's news of substantial investments in cryptocurrency by institutional players. According to updates from Cointelegraph and posts on X, corporate Bitcoin treasuries are seeing a surge, with companies like BTCS reportedly adding significant amounts of Ethereum to their holdings. This trend of corporations stockpiling digital assets is often interpreted as a hedge against inflation and a vote of confidence in the long-term value of cryptocurrencies. As a result, we're seeing a slight uptick in Bitcoin and Ethereum prices in today's trading, suggesting that institutional buying could be providing a buffer against broader market uncertainties. On the regulatory front, political developments are creating waves in the crypto space. Recent reports from sources like the South China Morning Post suggest that Hong Kong is positioning itself as a leader in stablecoin and tokenization innovation, even as global political figures, including former U.S. President Donald Trump, advocate for the U.S. to become the crypto capital of the world. Meanwhile, the U.S. Securities and Exchange Commission has delayed decisions on several cryptocurrency-related exchange-traded funds, including proposals for Solana and Bitcoin ETFs, as noted in posts on X and confirmed by outlets like Coinpedia. These delays are contributing to a cautious mood among investors, with some market analysts pointing to regulatory uncertainty as a factor in recent price dips for altcoins like Solana. Economically, the crypto market is also reacting to broader macroeconomic indicators. As reported by A-Invest, the market is keenly awaiting the Federal Reserve's latest policy decisions and upcoming GDP data, alongside a White House report on digital currencies. Investors are particularly focused on how interest rate changes might impact risk assets like cryptocurrencies. Historically, tighter monetary policies have led to sell-offs in speculative investments, and there's concern that a hawkish stance from the Fed could dampen the recent bullish momentum in Bitcoin prices. For now, though, the market seems to be holding steady, possibly buoyed by positive corporate news and growing adoption narratives. Another noteworthy development comes from press releases in the blockchain sector. According to updates on CryptoNews.com, a new AI-driven crypto project called Subbit is introducing tools for creators to bypass high-fee platforms using blockchain and staking incentives. This initiative aims to empower content creators by redirecting income through decentralized systems, potentially disrupting traditional monetization models. While it's too early to gauge market impact, such innovations often spark interest in smaller altcoins and DeFi projects, which could see increased trading volume in the coming days if the project gains traction. Let's connect some dots between these events and market movements. The partnership between Circle and FICE, along with corporate treasury growth, appears to be fostering a sense of optimism, particularly for major cryptocurrencies like Bitcoin and Ethereum. However, regulatory hesitancy in the U.S. and looming economic policy decisions are injecting a layer of uncertainty, especially for smaller or newer tokens. This push and pull dynamic is evident in today's mixed market performance, where top-tier cryptocurrencies are showing resilience while some altcoins face downward pressure. As we wrap up, it's clear that the crypto and blockchain landscape remains a complex interplay of innovation, regulation, and economic forces. The next 24 hours could bring further clarity, especially with anticipated updates from the Federal Reserve and continued developments in global crypto policies. We'll keep you informed as these stories unfold. Thank you for tuning in. This has been your evening news update, and I'm signing off for now. Good night. Good evening and welcome to our nightly news broadcast. I'm your host, and tonight we're diving into the fast-moving world of cryptocurrency and blockchain technology with the latest updates from the past 24 hours. From groundbreaking press releases by fintech firms to political developments and economic implications, we've got a lot to cover. Let's get started. Our first story comes from the intersection of blockchain innovation and traditional finance. Reports circulating on the web, including updates from platforms like Cointelegraph, indicate that several major fintech firms are making significant strides in integrating cryptocurrency solutions. One notable development is the partnership between a leading payments processor and a prominent stablecoin issuer. This collaboration aims to enable U.S. banks to use stablecoins for instant payments, a move that could revolutionize cross-border transactions and reduce costs for consumers. According to posts found on social media platforms like X, this initiative is already generating buzz, with many in the crypto community viewing it as a step toward mainstream adoption. Let's pause for a moment to consider the market impact. Stablecoins have long been seen as a bridge between fiat and digital currencies, and with traditional financial institutions jumping on board, we could see increased stability in crypto markets as volatility often tied to speculative trading is offset by real-world utility. Shifting gears to the political arena, there's growing attention on how governments are approaching crypto regulation. News from sources like the South China Morning Post highlights a contrast in global strategies. On one hand, Hong Kong is positioning itself as a leader in stablecoin development and asset tokenization, aiming to attract blockchain businesses with favorable policies. On the other, political rhetoric in the United States shows a divide, with some prominent figures advocating for the U.S. to become a global hub for crypto innovation, while others push for stricter oversight. This comes as recent reports, including those shared on X, mention delays in decisions by regulatory bodies on crypto-related financial products like exchange-traded funds. What does this mean for the markets? Well, uncertainty in regulation often leads to hesitation among institutional investors. We've seen crypto prices fluctuate in response to policy announcements in the past, and these delays could keep some capital on the sidelines, potentially dampening short-term market enthusiasm. On the economic front, the crypto market is also reacting to broader macroeconomic indicators. As reported by outlets like iInvest, the cryptocurrency space is keenly awaiting updates on federal monetary policy and economic data releases, including GDP figures. Why does this matter? Interest rate decisions and economic growth metrics directly influence investor risk appetite. When traditional markets face uncertainty, cryptocurrencies often experience correlated movements as investors either seek alternative assets or pull back entirely. Additionally, there's chatter on social media platforms about a surge in corporate treasuries holding digital assets like Bitcoin and Ethereum. This trend, if it continues, could signal growing confidence in crypto as a store of value, potentially driving demand and supporting price levels even amidst economic headwinds. Let's zoom in on a few more specific updates from the blockchain sector. Press releases summarized on sites like Crypto News point to innovative projects aimed at disrupting traditional business models. One such initiative involves a blockchain platform designed to help content creators reclaim revenue through decentralized tools and staking incentives. The promise here is significant cost savings for creators over the coming years, which could further fuel the creator economy and drive adoption of blockchain tech. Meanwhile, other reports highlight record-breaking activity in blockchain mining and skyrocketing interest in non-fungible tokens, or NFTs, with some market segments reportedly seeing explosive growth. These developments suggest that despite regulatory and economic uncertainties, the underlying technology and its applications continue to capture imagination and investment. Now let's analyze how these events tie together. The push for stablecoin integration by fintech firms could stabilize certain crypto assets, making them more appealing to risk-averse investors. However, political indecision on regulation might counteract this by creating a wait-and-see attitude among larger players. Economically, if upcoming data points to a slowing economy, we might see a flight to safer assets, though corporate adoption of crypto could provide a counterbalance, buoying prices. The surge in blockchain projects and NFT interest, meanwhile, show that innovation isn't slowing down, and this grassroots momentum could keep the sector vibrant even if top-down pressures mount. As we wrap up this segment, it's clear that the crypto and blockchain space remains a dynamic and complex ecosystem. The interplay between technological advancements, political decisions, and economic conditions continue to shape market movements in unpredictable ways. We'll be keeping a close eye on how these stories develop in the days ahead. That's all for tonight's broadcast. Thank you for joining me. I'm signing off, and I'll see you tomorrow with the latest updates. Good night. Good evening, and welcome to our nightly news update on the fast-moving world of cryptocurrency and blockchain technology. I'm your host, bringing you the latest developments from the past 24 hours, covering press releases from blockchain and fintech firms, political and economic angles, and an analysis of how these events are influencing market movements. Let's dive right in. First up, there's significant buzz in the fintech space as partnerships and innovations continue to bridge traditional finance with the crypto world. Reports circulating on platforms like X and confirmed through various online sources indicate that Circle, a major player behind the USDC stablecoin, has partnered with FIS, a leading financial services technology provider. This collaboration aims to enable U.S. banks to use USDC for instant payments, a move that could streamline transactions and reduce costs for financial institutions. This is a notable step toward mainstream adoption of stablecoins, which are often seen as a stable bridge between volatile cryptocurrencies and fiat currencies. The market sentiment around this news appears positive, with many in the crypto community viewing it as a signal of growing institutional trust in digital assets. Shifting to corporate moves, we're seeing an uptick in Bitcoin treasuries among major firms, reflecting a broader trend of companies diversifying their balance sheets with digital assets. According to posts on X and corroborated by web updates from outlets like Cointelegraph, corporate Bitcoin holdings are on the rise, with some firms significantly increasing their stakes in recent days. This trend aligns with a growing narrative of Bitcoin as a hedge against inflation and economic uncertainty, especially as global markets await key economic data and policy decisions. The accumulation of Bitcoin by corporations often correlates with upward price pressure in the market, as it signals confidence from deep-pocketed players, and we've seen Bitcoin hovering at relatively strong levels in recent trading sessions, likely buoyed by such news. On the regulatory and political front, there are developments that could shape the future of crypto in significant ways. According to recent updates from Crypto.news and other web sources, the U.S. Securities and Exchange Commission has delayed decisions on several crypto-related exchange-traded funds, including proposals tied to Solana and other digital assets. These delays, now pushed to later dates in 2025, reflect ongoing caution among regulators as they grapple with how to classify and oversee these innovative financial products. Meanwhile, political rhetoric around cryptocurrency is heating up, with figures like former President Donald Trump advocating for the U.S. to become a global leader in crypto, as reported by the South China Morning Post. This comes at a time when other nations like Hong Kong are pushing for dominance in areas like stablecoins and tokenization. The interplay of regulation and politics often creates uncertainty in crypto markets, and we've observed some choppy trading in altcoins as investors weigh the potential for stricter oversight against the promise of broader adoption. Economically, the crypto market is also bracing for impact from broader macroeconomic events. As noted in reports from ainvest.com, investors are closely watching upcoming Federal Reserve policy announcements and U.S. GDP data releases. These indicators could influence interest rates and liquidity in financial markets, which often have a direct effect on risk assets like cryptocurrencies. Historically, a dovish Fed stance, hinting at lower rates, tends to drive investment into speculative assets like Bitcoin and Ethereum, while a hawkish outlook can trigger sell-offs. With the crypto market already sensitive to regulatory news, the combination of economic data and Fed signals in the coming days could either amplify current trends or spark volatility. Now, let's connect the dots between these news events and market movements. Over the past 24 hours, Bitcoin has shown resilience, maintaining a steady position despite regulatory uncertainties, likely supported by corporate buying and positive sentiment around stablecoin adoption. Ethereum and other major altcoins have experienced mixed performance, with some benefiting from blockchain innovation news while others dip on regulatory fears, as seen in live updates on cryptonews.com. The NFT market, meanwhile, is reportedly seeing a surge in activity, with some sources on X noting significant growth in trading volume, which could be a sign of renewed retail interest in niche crypto sectors. To wrap up this segment, it's clear that the crypto and blockchain space remains a dynamic intersection of technology, finance, and policy. Partnerships like Circle and FIS are paving the way for practical applications of blockchain tech, while corporate investments signal long-term confidence. However, regulatory delays and upcoming economic data remind us that this market is far from predictable. As always, investors are advised to stay informed and approach this space with caution. That's all for tonight's crypto update. Thank you for joining me, and I'll see you tomorrow with the latest news and insights. Good night. Good evening, ladies and gentlemen, and welcome to our nightly news broadcast. I'm here to bring you the latest updates from the fast-moving world of cryptocurrency and blockchain technology, covering the past 24 hours with insights from press releases, political developments, economic trends, and market movements. Let's dive right in with a comprehensive look at what's shaping this dynamic industry. We begin with significant developments from blockchain and fintech firms. According to recent updates shared on platforms like Cointelegraph and Crypto News, several companies have made headlines with innovative strides. One notable announcement comes from a major fintech player collaborating with banks to integrate stablecoins for instant payments. This move signals a growing acceptance of digital currencies in traditional finance, potentially paving the way for faster, more efficient transactions across borders. Additionally, posts on social media platforms highlight that a prominent blockchain firm has filed with regulatory bodies to raise substantial capital through a mixed shelf offering. While specifics are still emerging, this could indicate confidence in scaling operations or funding new projects, a bullish sign for the sector. Shifting to the political landscape, there's a buzz about regulatory delays and policy anticipation. As reported by sources like iInvest and South China Morning Post, the crypto market is closely watching decisions from regulatory bodies in the United States regarding several exchange-traded funds tied to major cryptocurrencies. Decisions on these financial products have been postponed, creating a sense of uncertainty among investors. Meanwhile, there's talk of political figures advocating for the U.S. to position itself as a global leader in cryptocurrency innovation. Across the globe, regions like Hong Kong are also pushing forward with initiatives in stablecoins and tokenization, aiming to carve out a competitive edge in the digital asset space. These political maneuvers are critical, as they could either accelerate adoption or impose stricter controls, directly impacting market sentiment. On the economic front, the crypto market is bracing for broader macroeconomic indicators. Reports from the web suggest that investors are keenly awaiting outcomes from Federal Reserve policy meetings and upcoming GDP data releases. These economic signals often influence risk assets, including cryptocurrencies, as they hint at potential interest rate changes or economic slowdowns. A tightening monetary policy could dampen enthusiasm for speculative investments like digital currencies, while positive economic data might fuel optimism. Furthermore, a recent report circulating in financial news circles mentions corporate treasuries increasing their holdings of major cryptocurrencies, a trend that underscores growing institutional interest despite economic uncertainties. Now, let's analyze how these news events are correlating with market movements. Over the past 24 hours, the crypto market has shown mixed signals. Major cryptocurrencies like Bitcoin and Good evening, ladies and gentlemen, and welcome to our nightly news broadcast. I'm your host, bringing you the most recent and impactful updates from the world of cryptocurrency and blockchain technology over the past 24 hours. We've seen significant developments across press releases from blockchain and fintech firms, political maneuvers, and economic factors influencing market trends. Let's dive into the details and analyze how these events are shaping the crypto landscape. First up, let's talk about a major update from the regulatory front. Reports circulating on platforms like Cointelegraph indicate that the U.S. Securities and Exchange Commission, or SEC, has given the green light to in-kind creation and redemption mechanisms for Bitcoin and Ethereum exchange-traded funds, or ETFs. This is a pivotal move. It allows ETF issuers to create and redeem shares directly with the underlying cryptocurrency rather than cash. What does this mean for the market? Well, it could potentially increase liquidity and reduce costs for investors, making these funds more attractive. We might see a positive impact on Bitcoin and Ethereum prices in the short term as institutional interest grows, though some caution remains as regulatory clarity is still evolving. Shifting gears to political developments, there's buzz about a comprehensive crypto policy report from the White House, expected to be released soon, as noted in posts on social media platforms like X and reported by outlets such as iInvest. This report, anticipated to outline a 180-day policy framework, has sparked optimism among crypto enthusiasts. Analysts suggest it could signal a more structured approach to regulation in the U.S., potentially addressing long-standing concerns about taxation and usage restrictions. If the report leans toward supportive policies, we could see a boost in market confidence. However, any hint of stringent measures might dampen the recent bullish sentiment we've observed in major cryptocurrencies. On the fintech front, press releases highlighted by sources like Crypto News point to innovative projects shaking up the industry. One notable mention is a blockchain-based initiative aimed at helping content creators reclaim income through decentralized tools and staking incentives. The claim is that this could save billions in fees over the next decade by cutting out high-fee intermediaries. This aligns with broader trends in decentralized finance, or DeFi, where blockchain technology is being leveraged to disrupt traditional financial models. Market-wise, such innovations often drive interest in altcoins tied to DeFi protocols, and we're seeing some of these tokens outperforming major players like Bitcoin, which appears to be in a consolidation phase, according to posts on X and analysis from NordX. Meanwhile, in the realm of tokenized finance, there's growing momentum as reported by multiple sources, including Cointelegraph. Tokenization, the process of converting real-world assets into digital tokens on a blockchain, is moving mainstream. From real estate to art, firms are launching platforms that could redefine ownership and investment. For instance, a recent launch of a crypto-only real estate platform with significant listings showcases the potential scale of this trend. This could have a ripple effect on the market, as tokenized assets often attract new investors, potentially driving up demand for blockchain infrastructure tokens. However, adoption risks and regulatory hurdles could temper short-term gains. On the economic side, the crypto market is keenly awaiting key data releases and policy decisions, as covered by iInvest. With the Federal Reserve's latest policy meeting and upcoming GDP data on the horizon, investors are bracing for volatility. Cryptocurrencies, often seen as a hedge against traditional market uncertainties, could see increased trading activity if economic indicators point to inflation concerns or interest rate hikes. Bitcoin, in particular, has historically reacted to such macroeconomic signals, and we might see sharp price movements depending on the Fed's stance. Lastly, a word of caution from the darker side of crypto. Reports, including those on X, highlight a staggering rise in AI-driven crypto scams, with losses running into the billions. This serves as a stark reminder of the risks in this rapidly evolving space. Market sentiment could take a hit if high-profile incidents continue to erode trust, particularly among retail investors. So, how do all these pieces fit together? The past 24 hours paint a picture of a market at a crossroads. On one hand, regulatory advancements and innovative fintech solutions are fueling optimism, potentially driving up prices for Bitcoin, Ethereum, and select altcoins. On the other hand, looming economic uncertainties and rising scam concerns could introduce volatility. Investors appear to be treading carefully, balancing the promise of tokenized finance and DeFi against the backdrop of policy unknowns. As we wrap up this segment, it's clear that the crypto and blockchain space remains as dynamic as ever. We'll continue to monitor these developments and bring you the latest as they unfold. Thank you for joining me tonight. This has been your nightly news update, and I wish you a pleasant evening ahead. Good evening, and welcome to our nightly news update. I'm here to bring you the most recent developments in the world of cryptocurrency and blockchain technology from the past 24 hours. We've seen a flurry of activity across press releases from blockchain and fintech firms, significant political updates, and economic factors influencing market trends. Let's dive right in with the details. First, let's start with some exciting news from the fintech and blockchain sector. According to recent updates circulating on various platforms, including posts found on social media, a major cryptocurrency exchange has announced plans to go public with a substantial valuation. This move signals growing confidence in the mainstream adoption of digital assets and could potentially attract significant institutional investment into the crypto space. Additionally, there are reports of innovative blockchain projects introducing new tools aimed at reducing fees for content creators. These tools leverage blockchain technology to empower creators with alternative revenue streams, a development that could disrupt traditional platforms and save billions over the coming years. While these announcements are promising, they are still early stage and market reactions remain to be fully seen. First, let's start with some exciting news from the fintech and blockchain sector. According to recent updates circulating on various platforms, including posts found on social media, a major cryptocurrency exchange has announced plans to go public with a substantial valuation. This move signals growing confidence in the mainstream adoption of digital assets and could potentially attract significant institutional investment into the crypto space. Additionally, there are reports of innovative blockchain projects introducing new tools aimed at reducing fees for content creators. These tools leverage blockchain technology to empower creators with alternative revenue streams, a development that could disrupt traditional platforms and save billions over the coming years. While these announcements are promising, they are still early stage and market reactions remain to be fully seen. Shifting to the political landscape, there's notable buzz around a comprehensive cryptocurrency policy report expected from the White House. Sources across the web, including news outlets like Cointelegraph, indicate that this report could set the tone for future regulatory frameworks in the United States. The anticipation of this policy update has created a sense of optimism among investors, as clarity in regulation often paves the way for greater market stability. However, some analysts caution that overly stringent policies could dampen innovation, so the crypto community is watching closely. This political development appears to be influencing market sentiment, with many traders holding positions in anticipation of favorable news. On the economic front, the crypto market is also bracing for broader macroeconomic indicators. Reports from financial news platforms suggest that upcoming Federal Reserve policy decisions and GDP data releases are on investors' radar. The interplay between traditional economic metrics and cryptocurrency prices remains complex. For instance, if the Fed signals a dovish stance on interest rates, we could see a boost in risk assets like Bitcoin and Ethereum, as investors seek higher returns in alternative markets. Conversely, a hawkish outlook might pressure crypto prices downward as capital flows back to safer assets. In the last 24 hours, we've observed slight volatility in major cryptocurrencies, which some experts attribute to this uncertainty surrounding central bank moves. Another significant development comes from the regulatory sphere. According to multiple sources, including posts on social media and news from outlets like Cointelegraph, the Securities and Exchange Commission has reportedly greenlit mechanisms for in-kind creation and redemption for Bitcoin and Ethereum exchange-traded funds, or ETFs. This technical change could enhance the efficiency of these investment vehicles, potentially drawing more institutional money into the crypto market. We've seen a modest uptick in trading volumes for these assets over the past day, which may be an early indicator of investor interest following this news. Now, let's analyze how these events are correlating with market movements. Major cryptocurrencies like Bitcoin and Ethereum have shown mixed performance in the last 24 hours, with slight fluctuations that reflect the uncertainty of upcoming economic data and policy announcements. The optimism around potential regulatory clarity and ETF developments seems to be providing a supportive base, preventing steeper declines. However, the looming Fed decisions are keeping gains in check as investors remain cautious. Altcoins, on the other hand, are experiencing varied responses, with some DeFi tokens gaining traction on the back of new project announcements from fintech firms. Lastly, I want to touch on a concerning trend highlighted in recent reports. There's been a sharp rise in AI-driven crypto scams, with losses mounting into the billions globally. This serves as a stark reminder for investors to exercise caution and conduct thorough due diligence, especially in a market buoyed by rapid innovation and hype. As blockchain technology evolves, so too do the tactics of bad actors, making education and vigilance more critical than ever. To wrap up, the past 24 hours have been packed with developments that underscore both the opportunities and challenges in the cryptocurrency and blockchain space. From fintech innovations and political policy anticipation to economic uncertainties and market volatility, the crypto world remains as dynamic as ever. We'll continue to monitor these stories as they unfold and bring you the latest updates. Thank you for tuning in. This has been your nightly news update, and I'm signing off. Good night.